I guess the first obvious question is, it hasn't happened in about 15 years or since 1998, so longer than that. Why is the U.S. involved? What was the U.S.'s stake in this?
Yeah, exactly. 1998, the last time they intervened in the same direction here. I think that this is all about self-interest. You know, you have Scott Bessent and you have Donald Trump out there saying that they're doing favors for friends, or maybe they're doing this in the interest of global stability in the currency markets. I don't know. What I see here is an administration that promised to get borrowing costs down, promised to get mortgage costs down, and they're heading into a midterm election with 10-year yields around the highest in 18, 19 months. That's a problem for them. And of course, they're going to be concerned when you see the largest foreign holder of treasuries holding a portfolio of around $1.1 trillion of these things, going out and selling treasuries on the open market so that they can intervene to prop up this currency. So the U.S. is getting involved and saying, gosh, isn't there another way that you can go about this? I think that's what's really going on here, Scarlet.
Right. They don't want Japan to start dumping treasuries when they're selling dollars to buy yen to support the currency market. A lot of people are saying this is a short-term fix, that it won't last without something more fundamental changing. What would be that thing?
Yeah, I certainly feel that way. I feel that both Japan and the United States here are reaching for those short-term fixes because they don't want to take their economic medicine. For Japan, it needs to sort of get on with it, and the Bank of Japan needs to raise rates. You know, at the short end of the curve, rates are still meaningfully negative in real terms. It's time to get on with it, Scarlet. And you know, back in the United States, this is also sort of a chewing gum fix for the things that it doesn't like about the yield curve. You know, the only thing to do here is to be a little bit fiscally more responsible, and maybe don't go around as a you know, geopolitical interventionist spooking the energy market like this, if in fact your priority is bringing down longer-term yields, Scarlet.
Yeah, you mentioned that the U.S. wants to lower borrowing costs, so bring that 10-year yield down. In what other ways has the White House acted to support treasuries to keep a lid on yields?
Yeah, well, this is exactly why I say they seem to be obsessed with these short-term sort of plugging the hole with chewing gum kind of remedies. So you had the Genius Act, right, where the idea is that you're going to have increasing Treasury demand coming from the stablecoin ecosystem. You have what they have done with issuance. You were talking about this earlier, really going heavy on the issuance of bills at the expense of longer-term issuance. You're hoping that longer-term yields don't rise too much from the supply factor, and other things as well. And so all of these are sort of gimmicks. They all feel very gimmicky to me, but what we're not doing is addressing way too high fiscal deficits and avoiding these geopolitical entanglements that are clearly going to upset the energy market and clearly going to upset inflation expectations.